Happy VA Wednesday. Today we're going to be talking about buying a house when you're PCSing. So if you're new to the channel, I'm a mortgage lender licensed in 48 states. I'm actually ranked the #1 VA loan officer in America. So I do a lot of VA. So in this video, I want to cover a couple reasons I see veterans declined when they should not be by other lenders. So I want to bring this to your attention first. Because that's the biggest problem I see, okay? So here's the deal. There's a lot of lenders that do not know how to do VA loans. It's that simple. People assume, oh, well, it's a bank, it's a credit union, they have to know. No, there's literally like no training unless people are doing their own training. Some companies will have a small portion, but it's not what you really need to know to succeed. One of the biggest mistakes I see happen is a lender qualifies a borrower using the BAH of their current station and not where they're moving to. That's right. Look, if you're in an area that's low and you're going to an area that's high, you could get declined, right? Because they could say, oh yeah, you don't have enough. If you're going from an area where it's really high to an area that's really low, they could say you qualify for more than you do. And you may be like, well, if they say that, they have to stick with it, right? No, guys, it gets declined in underwriting. You find your dream house, you're shopping with this letter, you write your offer, they accept it, you pay for your appraisal, you pay for your inspections, and then the lender goes, oh, the underwriter said, oh, we don't have enough income. Yeah, it's because they did it wrong there. That's the biggest one I see. So definitely pay attention to that. The second thing I see is, and I think you need to know this just as a veteran, VA itself does not have a credit score requirement. It's lender by lender. So sometimes I'll be talking to veterans and I'll be like, hey, why didn't you ever buy a house when you were in the military? And they're like, my credit wasn't good enough. I was always like 600 or 610. And I was like, you could have bought a house. They're like, what? I talked to XYZ and XYZ. They said it had to be over 620. Different lenders have different rules on credit scores. So we go off of credit history. What that means is like, look, if you have a ton of lates within the last year, you did debt consolidation, like really did some damage to your credit in the last 12 months, will I be able to get the loan through? No. But if you have like a 550, a 560 credit score, in the last year, there's no drama. A lot of times we'll see drama just from like being young, right? We all do it. We all do it, So you may have some drama from years ago, but like the past 12 months have been good. We can do a manual underwrite, and my team does a ton of those. So if a lender's saying no, you want to find out why. And one of the weird things we've seen recently, there's a big lender, and they're not known for VA, but a lot of real estate agents refer to them. They have this extra guideline on VA where even if your credit score is fine, even if the computer likes your file, no joke, if you have one late within a year, they won't do VA. That is not a VA guideline, okay? The only time I really care about lates within the last year is if your credit score is in that lower tier or the computer won't give me an approve. If the computer's giving me an approve and you have a Best Buy late from, October of last year, I do not care, but I've had 2 people come to me in the last month that were going to this lender and they're like, yeah, they're telling me I can do FHA though. There is no world where FHA is a better loan than VA. I just can't say it enough. Like, there's really not. Okay, what would be the ridiculous scenario? Well, if you're buying a 2-unit and you need rental income to qualify and you don't have 6 months reserves, then FHA could be better. Still not gonna be a better payment, right? But yeah, watch out for that. If a lender's saying, oh, you need to do FHA or you need to do conventional, VA is way easier to qualify for both. So that could just be the lender doesn't know VA. Now, the next thing I hear is, but my real estate agent said this lender does a ton of VA. Guys, here's the thing. One day, I hope that you guys can see all the data that I can see. And I say that because I can go into a database and look up a lender's NMLS number. That's how they track us all, right? And I can see how many loans they've closed. And I can see what type of loan they closed. Now, is the data perfect? No, but it's like within the ballpark. And I am more shocked now when a client says, oh, the realtor says they do a lot, and they do, than when someone says, oh, the real estate agent says they do a lot of VA. And I'm like, yeah, they did 2 in the last 2 years. Like, That is not a lot. They don't know what they're doing, and that is why they're pushing you to another loan. So really, truly watch out for that. The other thing is, the question I get a lot is, well, wait, do I have to sell my house? Let's say you're moving from Texas to North Dakota. Do I have to sell my house in Texas to use VA in North Dakota? Not generally. So it depends. If you're going to turn the house in Texas into a rental property, I can use projected rental income to offset that payment, okay? Now, the key is if you want to have 2 VA loans at the same time, which you can, okay? Just because you're turning this into a rental, you don't have to refinance it. And it's important you know that, because sometimes lenders tell you you do and you don't. So you don't have to refinance this. If you have enough eligibility for both houses, yeah, we can do VA 0 down in North Dakota too. I have clients, and it depends on the price range and where they're stationed, who have 2 or 3 houses. You know, they just keep on building as they go, and they've had enough eligibility. You know, usually when we get to that 4th house, they've got to put down some level of down payment, but, you know, they've been able to utilize their VA benefit maximum times. And here's what you need to know. It's a real benefit. You know, it's 0 down payment. If you want to put a down payment, you can. We won't stop you, but it's 0 down payment. You know, there's no mortgage insurance, which is a huge saving, and the rate is dramatically lower than conventional. If a lender's ever telling you that VA rates are higher than conventional, they just work for a company that likes to rip off veterans. It should never be higher, ever. Why? VA is a government insured loan. It's like one of the lowest risk loans. FHA and VA are super low risk, okay? Now, here's the thing that you need to know. If you're thinking of PCSing, the other thing that comes up is people will be like, well, you have to occupy within 60 days. You actually don't. So if we have your military orders, let's say that you're supposed to arrive in August and you want to close in May. Well, August is over 60 days away. Let's say it's the end of August. That's okay. I've got your military orders. If you close in May, your first payment will be in July. So you just want to make sure that you have the money to make the payment if you're buying the house a little bit early, but you don't have to stress about that 60-day rule as much, okay? The other thing is we do need your orders to close the loan, okay? And the reason is we all know that your orders could change, you know, but once they actually have given you orders, they're less likely to change. They still could, but they're less likely. If you can't get your orders yet, but you know 100% you're going there, if we can get something from your commander, I've been able to use that in the past as well, okay? So look, buying a house when you're PCSing is super easy. You know, it's something that we do every single day. It's a great way to take advantage of your VA benefit. It's a great way to use the time that you're serving in the military to invest in different parts of the country, okay? When you're buying a house while you're serving, generally you're going to be buying it for one of 2 reasons. Number 1, so that ultimately you can turn it into a rental property, or number 2, so that ultimately it has some level of appreciation so that when it sells, you make money. So just pay attention to what the opportunities are in the market that you're looking. And if you have questions, comments, you want to get pre-approved, you want to work with myself and the team, reach out. 786-933-2077. Thanks for watching.